Okay, let's unpack this. Today, we're taking a deep dive into, well, a company that's always in the headlines, Tesla.
Definitely hard to ignore.
Right. We've sifted through tons of material financial reports, market analyses, you name it, trying to pull out the really crucial bits for you.
Yeah, the goal is basically to give you a shortcut, help you get truly informed about this pretty electrifying company.
Exactly. We'll look at its journey, why the stock is famously, up and down,
Well,
what traditional investing ideas say about its value, and of course, how its leader shapes, well, everything. So what's the takeaway for you, the curious learner? Let's find out.
Okay.
So Tesla's transformation, it's been pretty incredible. From that luxury EV niche player
Right?
to really disrupting the mass market. I mean, thinking back to that production hell phase with the
Yeah.
Model 3, that felt like a huge moment, didn't it?
Oh, absolutely. A major hurdle. But they got through it. Started seeing consistent profits from 2019.
Just sheer scale.
Pretty much. Massive scaling, building those gigafactories globally, Shanghai, Berlin, Texas. It was, a master class in learning on the fly.
Building the plane while flying it kind of thing.
Exactly. High risk, high reward. Something traditional automakers just don't typically do. And, a lot of people still overlook the energy side.
The solar and batteries?
Yeah, solar, the Powerwall for homes, the mega packs for utilities. It's a growing business, serious recurring revenue potential there. It could really shift how we see them. Less car company, more sustainable energy company.
Interesting. So with that kind of growth, you'd maybe expect the stock to be, I don't know, steadier.
Huh, yeah, you'd think. But no, Tesla stock is the opposite. It's been a wild ride.
That surge past $1 trillion market cap was something else.
Insane. But then sharp drops too, right? Macroeconomic stuff played a part. And yeah, the whole Elon Musk buying Twitter thing definitely caused ripples.
Right, the acquisition. And didn't they do a stock split?
They did. August 2022, a 3-for-1 split. Made the shares cheaper, more accessible, brought in a lot more retail investors.
And does that add to the volatility?
It can, yeah. Because a lot of it seems driven by market narratives, by what Musk tweets, and how this, huge base of investors reacts almost emotionally sometimes.
Sentiment overriding the fundamentals.
In the short term, absolutely. You see it in technical indicators like the RSI, the Relative Strength Index. It often reflects these really intense market feelings, whether it's overbought or oversold based on emotion.
Okay, so if the market's reacting emotionally, how does old school value investing like Benjamin Graham's ideas even approach Tesla?
That's the tricky part. Graham's framework, it focuses on stable earnings, tangible assets, a margin of safety based on now.
And by that logic?
By that logic, Tesla looks, well, frankly, significantly overvalued at its current price. We ran the numbers based on its principles, and the intrinsic value came out around $117.65 based on that specific calculation method.
Wow, quite a gap from where it often trades.
Huge gap. It shows the fundamental mismatch, doesn't it? Graham values what exists. Tesla's price is largely a bet on, extraordinary future growth. AI, robotics, massive disruption. It's just a completely different way of looking at investment.
Let's talk about leadership then. Elon Musk. He's clearly the visionary, the driving force.
Undeniably. Central to their success.
But there's the other side. Controversial actions. The funding secured tweet incident.
Right, which led to that SEC settlement and fines.
And the Twitter acquisition distractions we mentioned, how does that factor in?
It creates what's called key person risk. His actions, his decisions, they directly move the stock and raise governance questions. It's a huge risk factor.
Is it just the price of innovation, maybe? Pushing boundaries?
Some would argue that, yeah. But it's a constant tension. Look at autopilot and FSD full self-driving. Amazing innovation drive, but it also leads to NHTSA investigations, recalls.
The safety regulator.
Exactly. It highlights that constant trade-off. Push hard on tech versus keeping regulators happy and ensuring safety compliance.
Okay, so summing it up. The bull case, the argument for Tesla, it's the tech leadership, the innovation, that growing energy ecosystem.
Right. Market leader, first mover advantage in many ways.
And the bear case, the argument against.
It's that high valuation we talked about, intense competition coming up,
Right.
the regulatory hurdles, and the leadership distractions and key person risk.
So buying Tesla stock now, it's still very much a high-risk, high-reward game.
Absolutely. You're betting heavily on continued, almost exponential growth and execution.
So Tesla really is still this high-growth, high-risk, high-reward story. Its journey's been pretty amazing, complex.
Definitely remarkable. From disruptor to now, a major player.
Which leads to a final question, maybe for you listening to think about. As Tesla matures, faces more competition, more regulation, how does it balance that relentless innovation drive with the need for, stable execution and compliance?
What does that actually mean for its future? Especially if it wants to be seen as this diversified, sustainable energy company and not just, well, another car maker. Something to chew on.